Just a note for Amazon. Amazon's Web Services is reportedly preparing to unveil a cloud service which would help companies improve the way they target advertisements.
Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 26th of August, 2022. Thanks for coming in today, the last day of the week here, last Friday of August of 2020. This is episode number 2302. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, on our convergent trading pre-market summary sheet, we see that we have a mixed market again. We're seeing the same thing. Oh, is it yesterday's date? Sorry, guys. Sloppy. I have a checklist and I missed that one. Yes. All right. All right. So another day where we have a mixed market. Pretty much every day this week has been a mixed market, it seems. By the time the trader bite starts, the market goes back to settle almost. The S&P, again, just about at settlement from yesterday. Strong close in the S&P yesterday and the other indices. And we're right at it in the 4,200 region. We're seeing crude, which had just a tremendous sell-off. Let me see. I'm turning down my squawk. That's who's talking. Tremendous sell-off yesterday. Broke the one-time framing up. Crude has been just a very interesting trade lately. Gold holding steady around the 1750 area. Silver, same thing. Copper just bouncing up and down, oscillating. And the dollar's not giving up its all-time high here, which was at 109 something. So overall, the market is looking for Fed's Chair Powell's comments today, expected to come across at 10 o'clock Eastern. The market's been anticipating these all week. It is all about, that Fed cocaine and interest rates. So there's been quite a bit of movement in the treasuries. And now we are right at the day in Jackson Hole where Fed's Powell is supposed to tell us how he's going to get out from under this rock in a hard place here. Overnight, we got German GfK consumer confidence, which missed by a fair amount, negative 36.5 versus negative 31.3 expected. Consumer confidence out of France came in pretty strong, 82 versus 76. The U.S. had personal income miss at 0.2% versus 0.5%. Personal spending for July in the U.S. also a miss, 0.1% versus 0.2%. The prior is 1% personal spending. Goods balance, goods trade balance advance for July came in at negative 89 billion or $89 billion deficit versus the expected $97 billion deficit. Wholesale inventories month-on-month advance for July came in at 0.8%. The prior is 1.9%. And the PCE, which is what many were anticipating on that release a half hour ago, the PCE price index year on year at 6.3, higher than the 6.2 expected, lower than 6.8 prior. So PCE came in a little higher. Month on month, though, it came in line at negative 0.1%. And again, Fed's Chair Powell at 10, Michigan sentiment final. This is not the big one. At 10 as well, and look out for comments, unscheduled comments by the various Fed speakers. We had some speakers come on yesterday, unscheduled, and made comments. So that's where that is. Looking at the S&P is balanced until just now, where it broke higher. It just broke from 4203 to 4210. Just about a minute ago, and it's still a balanced profile. It's still holding above the spike high from yesterday's close. It did test down almost to the, it tested down exactly to the 4180, which is about where we had our a point of control the prior session, and it's looking kind of bullish. It's looking kind of bullish. So that's why that is. Let's take a look at the big picture here to see what's going on. Here's the S&P pushing into the gap. Look at this. We're in the gap. We're in the gap now from 822. Gap mid being 4212 right here from the 22nd. So very nice push off the century figure. 4200 right down here, pulls in, and you can see pulls back. Nice big collision there, and then it starts to lift. And you can see the lifters, the blue dots lift. It's pretty decent lifting there. I expect it to continue. This is an impulse move right now, so this is not one you'd want to sell. The big picture, though, looking at TPOs, here's where we ended up last week. We ended up, at the low of 42.2075 last week. We gapped down. We consolidated. We held balance for 2 days. The balance had a point of control, overlapping points of control, and then yesterday came in slightly bullish. Could not get into the prior day's value. Remember, I was expecting it to push into 41.42 yesterday, and it didn't. And then it balanced above yesterday and ended up pushing into the 4200 century figure yesterday afternoon. Quite bullish move there into this weak structure above. So we have repaired. Remember, I've been talking about structures and how they're weak. We've repaired this gap down here. We've pulled back, and now we're repairing the structure above. And we're expecting it into the next key area to watch is 4220, 4220.75. So that's the S&P kind of pulling back and then into balance, hitting the 41.21 on the nose, folks. Hitting the 41.21 bounce on the nose, and now we're moving out of balance. Remember, the balance edge is 41.75. We're above that. This is bullish, out of balance, and it's responsive to the upper balance. So now we got to look at what is the upper balance. Where are the attractions in the upper balance? Let's load. I forgot to load all of the charts pre-broadcast this morning because I'm not on my game today. Having the wrong date for the Trader Bite, and now come on. All right, here it's slowly pulling this data. It's a lot of data. A lot. Man, it's a bummer. I did not prepare well for it today. It's like pulling down like 600 gigs. Okay, so the balance up here is around 42.80. I think it was 42.78, something like that. That's once we take out the 42.2075, we are likely to push into the 42.55, which is the low of this consolidation here. But the big area up above is right here at 42.75. So we moved from 41.21 to 42.75 balance. Okay. So that's what things look like currently. The overnight session is really squeezing here. There's not much else I want to share with you. I mean, hang on. I'll show you what I was talking about in terms of crude. Crude just I've been focused a lot on crude. I'll share this is proprietary information for Convergent, but I'll share it here. This is an image I posted yesterday of crude and setting the expectation on the close to break 42.79, which it ended up doing. Took a lot of patience, but it ended up breaking the one-time framing up on crude. So we saw the overnight session put in a high. Then we came in during the day session and it put in a lower high, missing the overnight high by a couple ticks. 70, the 74 missed it. It went to 70, 68 or something like that. And then we had an impulse down. These pink arrows are impulses down. We had an impulse down from the high. We had a bit of a tweezer top reversal, pullback to the mid in VWAP. That's setup number one. That is an impulse continuation trade. So sell the pullback. If you can see it, I know that's tough to see right there. Sell the pullback at VWAP and mid and look for the continuation. And we get a secondary impulse on the continuation, just explodes downwards from around 95.30 to about 94. And then pulls back to the mid and VWAP again, giving us setup number two, which is the impulse continuation on the second impulse. The target is the low at 94-ish, a little under 94, and it takes that out. Then it comes back all the way. There's nothing for me to trade here. There's no setup here on this pullback. And then we get another impulse push. And so we look for an area to lean against. The first area to lean against is this low right here. Second area to lean against is the 93.76. Didn't quite get there, but it set up this third setup at this low, and the target then becomes the one-time framing up limit, which is yesterday's low, the prior session's low at 92.79. And the expectation is for it to push to the prior week's high at 91.69. Based on that, of course, time of day didn't allow for that. The time of day was pretty late for this. It was already near the pit close, and but it ultimately took out the 92.79, and it went to something like I don't remember, 92.40 something. But look out for 91.69 in crude. Again, crude just presenting some really choice opportunities, in my opinion. Of course, it is not, trading crude is not suitable for everyone, but it's been a pretty interesting trade. Looking back at the S&P, what do we expect for today? Let's take a look at what we should expect here. Crude looks like on the open it went down to 91.85. Oh yeah, overnight it did make it down to that crude limit that I showed you, that 91.69. It already got that job done in the pre-market. Didn't look at it so far today. Okay, so here we are in the gap. Most important immediate number to look at is 42.2075. So we are 15 minutes away from opening. The primary scenario is that it's very likely to open out of range. We do have the strong spike up. I'm expecting an open auction out of range. Remember, Fed's Powell speaks just a half hour after the open. So it's not smart to make you can trade the MCL, Dennis. The MCL is $1 a tick. The micro crude, it trades very well, in fact, in terms of correlation. It is not smart to lose ammo before Fed's Powell comes in. The market is really going to position itself for that. So I expect the open to give us a fair amount of turbulence. I expect the open to give us an open auction out of range. I'm looking for it to respond back to yesterday's high, which is basically where we spent most of the overnight session. But ultimately, I'm looking for 42.2075 to go. And then I'm looking for it to push into 42.30 at some point today. This thing is very much bullish so far. The action is quite bullish. So pretty modest range. It could very easily hit the 50, but the ultimate target is going to be up here at 75. It's Friday. I don't expect the market to be that aggressive today, but we'll see right after Jay Powell announces. We'll see what the market does and respond accordingly. The secondary scenario is an open auction that has the continuation in the overnight session already, squeezes the overnight high into 42.2075, pushes into the prior week's range, and falls out with an impulse back to the open. This is relatively bearish, and then we are likely to check this thin excess that we put in yesterday. This could very quickly drop into 41.75 down here. 41.75 is the edge of balance. From 40.75 to 41.75 is the biggest balance, with a point of control of 41.21, 41.22. So 75 may get some action here on the downside in terms of support, and it could make this move. A 50-point move on the downside is definitely within range. I know they're opposing scenarios, but we are between two major balance zones right here. We have a balance zone at 75 above and at 21 below. I know it shows 40 here because the profile that's on the screen is showing only the bars that are on the screen. It's only profiling the bars on the screen. But if I go back to a higher time frame and squish in everything back to June, you'll see that it's from 75, 42.75 and 41.21, and we are in between these. The market is in an indecision zone or a thinly traded zone, and it's likely to make some aggressive moves this morning, compounded by the fact that the Fed's chair has to answer the question, what are you going to do in September? And the expectation is that in September they will raise 75 basis points so that they can pause, so they can stay out of the politics of the election. So the election in November. So that's how things look this morning. We're opening out of range. We're in between this whole week's range and all of last week's range. We're stuck in a zone in between, the gap zone. And because it's a gap zone, it's likely to entice traders to take positions in either direction. So I'm expecting the open to be pretty aggressive. If you're using, just very small stops, it's likely to trigger your stops this morning if you're wrong very quickly. 3-4 point stops won't mean much in this sort of environment. So that's what we're looking at for today. Just remember, once Jay Powell announces, the market is going to reprice. The yield curve is likely to make its move. The euro-dollar yield curve is likely to make its move, and we'll see some movement in treasuries, gold, crude, and so on. And then it's Friday. So in the afternoon, it's likely to be lazy, and then we'll make some final adjustments in the last hour. So my point being, just don't overtrade. It's very easy to overtrade today. And if you decide to jump in right at the open, it's very easy to put yourself in a position where you have to dig yourself out for the rest of the session. So, and there's a lot of headline risk after the open. So to me, it just seems like it would be smart to wait until Jay Powell does his thing, wait for the market to make its move and reprice, and then wait for your setups to show up and trade the setups the best you can. Okay? Good luck. I will leave you with that. Don't forget to sign up for the giveaway next Wednesday. You can find that at edgeclear.com/deli, edgeclear.com/deli. The giveaway is 3 drones, 3 pretty nice drones. We'll be talking about man versus machine. It'll be a panel discussion with Scott Andrews and Anthony Crudelli about trading in a discretionary way versus using automated systems, and the possibility of using an automated system to diversify your own discretionary trading. So sign up. Again, 3 drones are going to be given away. edgeclear.com/deli. I will catch you on Monday, And if you're a convergent, I'll catch you in the Mavens channel. Take care.